Well, hello and welcome. I'm Nadine Blaney from Ausbiz. Thanks so much for joining us. Well, today we're diving into an asset class that you could say has been hiding in plain sight. And we'll be speaking with the team looking to turn regional motels into a $500 million high-yield portfolio. So with us is Deltine Capital CEO David Toomey and COO Michael Jones to unpack the strategy, the opportunity, and the ambition behind it. Gentlemen, welcome. Thank you so much, David, Michael. Okay, just to get us started, what would you say is the simplest way to describe the Deltine High Yield Motel Fund? I like to get the name right.
Yes.
Deltine High Yield Motel Fund. What is it doing?
Right. Well, simple is the right word. It's a very simple buy and hold commercial property strategy. We focus on buying a diverse portfolio of highly profitable, high-yielding motels across regional Australia into a nice buy and hold 5-year portfolio.
So the obvious question that comes through is, why now? Why motels, first of all?
Well, motels are, as you say, hidden in plain sight. They're actually a very defensive and essential service provider to the regions. There's a lot of professionals, there's a lot of service providers, there's a lot of engineers and nurses and doctors and lawyers servicing our regions, and they need somewhere to stay. And so we're targeting that demographic by targeting the quality motels, the 4-star motels. And it's great commercial property. It's always on the main street in the middle of town. They're very busy, they're very profitable, and the margins are very high. It's too good to refuse.
I have a bit of a soft spot for motels, I must say. So when you are looking at these motels, are you looking for, those that are beaten up, those that need a facelift, those that are perhaps using old technology? As the COO, is that one of your main focuses?
Yeah, the new technology is the Dean, but it's definitely, we're not looking for old properties to fix up. We're buying the best property, best motel in the regional town, as David said, in the best location. So our focus is around 4-star quality, because our average guest that we're attracting is a corporate guest, from a diverse range of industries, with long average length of stay. So, but that tech stack is really important for us around making sure we get the distribution right of the rooms, we're getting the rate setting right, and we've got a structure where we can do a lot of that centrally and empower our on-site managers to really focus on property presentation and guest experience.
Well, we will delve a little bit deeper into that, and we already have some questions coming in for our audience. So don't forget that you can too ask a question live to Michael and David. You just have to go to your screen. There's a Q&A sort of area. Go there and we can attempt to answer these questions live. But back to motels and the why now part of the equation.
Well, it's been under the radar, so now is a good time to act because we're the first movers into this segment. There's a lot of opportunity, and we're going after the quality because there's a lot there on offer. Certainly, there is an alternative strategy of doing up motels, and a lot of people say, Dave, do something about them because we have to stay in these places with old, smelly bedspreads and things like that. But there's enough quality for us. It's too hard to refuse the good quality and the high yielding, the busy ones. We'll get to the doer-uppers later. But yeah, no, it really is now because there is a trend, an economic trend where you've got high construction costs, so supply is limited, but you've got high demand. You've also got an asset class that's historically been quite untouched. And so the purchase prices are quite attractive at the moment. So, buy low and sell high. The time is now to buy.
Okay. And what about the sort of dynamics of regional travel, what's happening in the regions? Because post-COVID, we definitely saw a big migration to the regions, first of all. But, we're looking at things like Future Made in Australia programs and the like. How do you factor in the macro?
Well, there's a lot of macro support for, like you say, the movements to the regions. There's the low Australian dollar that's bringing more international arrivals into the country. There's the generally high economic activity. It really is a great story because the diversification is quite large across the whole sector. It's not, can't make the mistake that it's a tourism industry because it's such a big industry of support of our professional service providers and travelling salespeople providing support to our region. So actually 60% of our guests are professionals and business people. And just to give you a bit of a view on the economics, our property in Seymour is next to the Puckapunyal Army Base. That's the defence industry. Our property in Tamworth, and that's in Tamworth is known for health, education, and protein manufacturing, in addition to country music. But now in Toomey, in the Snowy Valley, there's a whole lot of renewable energy projects. So it's diverse across regions, it's diverse across economies, and the whole, a lot of macroeconomic support.
Okay, well, we're going to look at one of the motels in your portfolio already in a little bit more detail in just a tick, but I'd still like to get back to the sort of foundational questions. Why hasn't somebody or a group already done this? Like, why aren't institutional investors interested?
Well, institutions, it makes sense for them to go after the 20 million and higher. They're big, expensive teams in the city, and they've got... it's easy to sort of go after a $50 million hotel or a $25 million hotel because, there's more money involved. It has better economy for an expensive, city investment manager. There has been some groups look at motels, but they very quickly escalate into the hotels and the luxury chains. But we want to stay boring because that's where the money is, that's where the yield is, and that's where the opportunity is. We will stay boring. We'll target motels between 5 million and 15 to 20 million because that's the sweet spot. It's just below the institutions and just above the mum and dad investors. And that's the one that's been overlooked. And that's where we can find passing yields of between 10 and 13, 14%. It's quite incredible.
Go ahead.
Yeah, can I just on that, Nadine, I've been in this industry for nearly 20 years as a senior executive in a range of different properties. In a snobbish way, I was part of the problem that I didn't realise, the opportunity that existed in motels. And it wasn't until David brought it to me and I said, they're mum and dad operations, how could you corporatise that? It wasn't until that happened, then I started looking under the bonnet of how profitable these properties are and the upsides that exist. And then that I realised, the opportunity that exists. So, someone who's been in for 20 years, it was under my nose as well. I didn't realise that.
Yeah, well, I think that's a good reminder to sort of ask, what is Deltine Capital? Why are you doing this personally?
Well, Deltine Capital is capital corporate advisory set up to establish this fund. So I've had a history in my career of private equity investment management in Europe for 8 years, investing Dutch pension fund money on behalf of a private equity fund around the world. Came back and did corporate finance consulting. I've worked in a bank and done project and structured finance. I've worked in a family office as a chief investment officer for many years. So I've seen a whole lot of different asset classes from venture, private equity, infrastructure, real estate. And I just can't get past the returns available in a vanilla buy and hold commercial property segment in Australia. And so when I looked at somewhere to put my money, like a lot of wealthy Australians, I'm not calling myself wealthy, but like a lot of family offices, which is the industry I worked in, they settle on commercial property because of the yields and because of the bricks and mortar. And I found this over the last 10 years, the yields have really compressed in the commercial property sector generally. But I've found this segment, the motel industry, where the yields are still above 10%, and that's what I'm going after.
How did you two meet, or how did you get involved then, if you come from the industry yourself?
Yeah, so a mutual friend who was introduced me to David, and he had an opportunity to go and do something else. And he said, we need to come and meet these guys because they need someone with the hotel operation experience, which is what my background is on large scale, teams and property. So we've obviously been working on this for a while now, but with our CFO as well, who's known Dave for a long period of time. But yeah, I just really feel very lucky to be part of the opportunity.
Now, I would like to get into returns, obviously, but I just want to, for our audience sake, take a step back. So you've put this fund together. You're looking to raise capital. You've already acquired 4 properties, I believe it is, in this fund.
Yes, we're settling on the 3rd on Friday, and there's another 3 in the pipeline that we're going through contractual negotiations now. So yeah, it's quite an active pipeline. Okay,
we've got a picture of one of the properties. So I think that this is a really interesting and obviously simple way for you to explain to us this New Crossing Place Motel. What did you see in it? How do those figures at the top left add up?
Well, it's great because, I mean, it's a very good example of what we can find in this industry. It's a small town, unassuming, but this is a 26-room, 4-star apartments and motel property. It was full. It was 70%, not full, but it was very busy. 70% occupancy, high room rate, high profitability. It's a 60% margins, turning over 1.3 million a year. And we looked at the drivers of that success. It's the best motel in town. There's only 5 or 6 motels in town, but it's right next to 9 minutes away from the Puckapunyal Army Base, which is one of the most famous defence industry bases in Australia. And so there's a lot of people like that. And it's also in the southern end of the Goulburn Valley. There's a lot of wineries around there as well. There's more than just the Army Base, but obviously the Army Base is a real driver of visitors to the area who are coming in to service the base. A lot of the civilians come to service the base. They're not allowed to stay on the base because they haven't got security clearance, so they need somewhere to stay, and they all stay in the motel and in Seymour. So it's really an example of, one of these gems in regional Australia. It's a busy motel. It's a good quality motel, high profitability, and a really good defensive sort of underpinning of guest quality. And, in as I said, in summer, they have a lot of weddings coming through the regions there, the wineries. There's a massive, one of the best go-kart tracks in Australia is actually in Seymour. So that fills up 4 or 5 weekends a year with all the go-kart drivers.
So, Michael, when you see a property such as that, what's the first thing that comes into your mind? How to improve it?
Yeah, so I think the runs are on the board at the moment with the revenue that we're achieving. So a family had the property for a couple of generations and done a fantastic job with it. From my perspective, it's low maintenance. There is no limited capex required. And what we've been able to do since purchasing the property last year, we've had 15% revenue growth. And that's come off the base of small growth in occupancy, large growth in the average rate. And how we've achieved that, we first got in, had a big presentation, the way that we wanted to make sure the rooms are presented. But what we've done is applied our proprietary revenue management and distribution strategies, and that has seen the average rate grow significantly. Like I said, when I met with the family who we purchased the property from, who, as I said, done a great job over generations, one of my first questions to them was, why haven't you adjusted the rate? Why is the rate, whether you're 30 or 80% occupancy, why doesn't it change? And the response was, well, we're busy. We're busy doing other things. We've got our outside work life. We've got our kids taking them to basketball. So what we've done in that time is we've changed that, and we're now achieving a much better rate.
Okay. So that's a real sort of case in point. I thought that we might get to a viewer question now, and it might take us out of this realm, but I think it touches upon a lot of those points. And Tim, really appreciate you writing in ahead of time, saying, considering that many motels are still owner occupied, as the one in Seymour was, how does Deltine intend to incentivize day-to-day managers to make sure that they take the same level of pride in their work that an owner-operator would? And does Deltine have anyone amongst their current board and management team with day-to-day experience managing motels? If not, how does a fund manager overcome that skills gap? You deserve a gold star for that question. You covered off a lot of what I would ask as well.
It is a great question, and we get it all the time. And this is why the opportunity exists, is because there's a perception that they're all mum and dad owned and operated motels, and that's true for half of the industry. So the properties, there's about 1,800 across Australia that are between 5 rooms and 20 rooms that are mum and dad run cottage industries. We're not buying them. So they're the ones that are too small for us. We buy the ones that are sort of 20, 25 rooms and up to 60. And they're already, to an extent, corporatized and professionalized, because it's quite often that the owners aren't the on-site managers. They've hired for a salary, an on-site management couple who are professionals in what they do. So we find we don't have to replace the passion of the mum and dad. That's not the segment we're going after. So I call this a smoke screen. The smoke screen are those 800 small ones hiding all of the 1,800 small ones, hiding the 1,800 larger ones. And that's the target that we're going after. So yes, it's still very important to get a great on-site manager, incentivize them. And we've got, 4 or 5 different specialist recruitment agencies around Australia who specialize in managing a portfolio of on-site managers. So we get a lot of relief managers who we can test and bring into the fold. We, as the first real corporate going after this segment, we can offer career progression, we can offer a portfolio where you can move around. So we really have put a lot of time and thought into the on-site management and the staffing. And the other thing we're doing is making it much simpler for our staff on the ground. So we shy away from food and beverage. We're not going after having a restaurant, which is obviously where it is very difficult to get waiters and waitresses and chefs in the regions. And so we shy away from food and beverage and just try and keep it simple into accommodation. But we also centralise a lot of their tasks. So their bookkeeping, the digital marketing, the marketing and the revenue distribution, they don't have to worry about that. They just have to worry about being friendly, giving a warm welcome to the guests, looking after them when they're there, and a friendly goodbye, making sure the rooms are maintained and clean. And that's a real wholesome strategy of the operational overview. Mike, do you want to?
Yeah, and I think our new cost in place, which we just spoke about a minute ago, Nadine, is a great example of a really strong husband and wife couple who have had decades of experience, had been in Queensland. When we advertised the role, wanted to come back to Victoria, wanted to be close to Melbourne, but not in Melbourne, wanted to be out in the region. I was rapt to grab them as our management couple for Seymour. But what attracted them to the role was the quality of the property, the fact that we were a larger organisation. We centralised some of those key parts of the role so they can focus on guest experience, and they're doing a fantastic job. I mean, I'm a bit of a, making sure I speak to them daily to support them and definitely empowering them in their role down there. But they're doing a fantastic job. At Tamworth is a similar story, and Chimit will be the same, where my job is to make sure we grab the best people that we can. I support them in their role. My passion, hopefully, and it is delivering through to their passion because these people are lifelong hospitality professionals, and they want to make sure they work in a property that's well respected, that has repeat clientele, because also then it's a day-to-day basis that makes their job not easier, but more enjoyable as well.
It also gives us a bit of an unfair advantage. I mean, there is so many independently run motels in the regions. If we have a motel in town that is supported by someone with the extensive background Michael has and the rest of our team, which has revenue management and financial backing, we give them so much support from the centre office that sort of gives them that unfair advantage in the day-to-day sort of task that they have to take on.
If my eyes glazed over, it's because I'm thinking of some sort of a tree change, a sea change, so just forgive me. Now that gets more difficult though as you scale up to 500, although that will take place over 5 years, correct?
$500 million fund,
Sorry,
absolutely. We're looking to buy 10 motels a year for the next 5 years to build up to that $500 million fund. And there's certainly the opportunity out there. There's a lot of these motels out there. The opportunity is there. We've already got the cadence. We've bought 3 this year, and we've got 3 in the pipeline for Q1 next year. So we're quickly getting up to the cadence that we want. It really is. And you're right. So scaling that comes back to the digital side of the management. So we can centralise bookkeeping, centralise revenue management, centralise digital marketing. We have a single property management system across the group, single booking engine. A lot of those things then, again, has the expertise of a central team. And again, I call it, hitting a nail with a sledgehammer, is bringing Michael in to manage all of that. He's managed, he's been the CEO of the Townsville Casino and Resort, and that had, 300 rooms, a luxury hotel, had 7 rooftop, 7 bars and restaurants, and a casino. So the man is very experienced when it comes to complex operations with lots of staff.
Yeah,
and I think Nadine, the motels are much less moving parts from an operational perspective. As long as we've got the rates right, the rooms presented nicely, the guest experience is there, and we encourage our guests to come back and to give them a great time. It's not as complicated as adding a restaurant and bars and room service and concierge.
I can see that, and you don't need that all the time when you're traveling.
Correct.
You reserve that for your once a year big trip overseas.
There's 3 or 4 things you've got to get right, and that's a comfortable bed, a warm shower, and an air conditioner that doesn't sound like a jet engine taking off.
This is true, and cleanliness. Cleanliness is very
clean, and a clean room, and that's our 4 absolute must-haves. And if we get that right, that's 80% of the job done.
Okay, we just had a graphic up on screen because let's talk about the investment opportunity then. So you're targeting 20%, roundabout there, return per annum
Yes.
over the 5 years, correct? How do you come to that?
Well, it's just some of the parts. So it does sound a bit too good to be true, but when you're buying these motels at a passing yield of 11%, between 10 and 13%, our average at the moment is 11%. Well, you're halfway there. I mean, and we can also then, the next three parts of the capital growth are we're increasing the operational efficiency. So as Michael was saying, with Seymour, we've increased revenue by 15%. We've actually done really well with the expenses as well. So we have operational improvement, low-hanging fruit in every one of the motels. So the first part is the buying well and buying a good high yield. Second part is that operational improvement, which gives us 2 or 3% uptick. The third part is just inflation. These are great inflation protection assets because you don't have to wait for a yearly sort of rent review to increase the rent. From day to day, you can increase the prices of the room. So we estimate 3% inflation of room prices over the course of the 5 years. And then once we get an institutional grade portfolio together, a $500 million portfolio with a diverse quality group of assets, that's when we can get that yield compression and sell that for a higher price than what we bought it for. So it's a basic vanilla private equity strategy of buy and build.
Mm-hmm. So you mentioned diversification. What does diversification look like across 50 plus motels, and what does that ensure?
Yeah, well, exactly. So one of the questions we get is what could go wrong? And when you're looking at 30, 40, 50 assets together, if something does go wrong in a single property, then it's quickly covered up from a return perspective of the overachieving other properties or just the sort of business as usual in the other properties. So that diversification in the truest sense of the word is makes volatility less. And when you are having problem in a particular region or a particular town, the other 10, 20 assets are sort of, making up for that. And diversification in this instance is Australia-wide, so looking at all regions, all states in Australia. But it also, once you get into the regions, you realise how diverse the economies are. Like I was saying before, Seymour is the defence industry, Tamworth is protein manufacturing, health and education and country music, Toomey is renewable energy. So as we diversify, we also diversify across different silos in our economy as well.
Yeah, so that's an interesting question. So how do you find these? Are you boots on the ground type people?
We are. We're very much hands-on. We're a startup, and so we're putting, a significant amount of work into making sure we get the right properties. We've got a really great relationship with a number of the key brokers across the country who are now bringing us opportunities, particularly two of the in the acquisition pipeline off-market opportunities that we're looking to secure. But we've also, looking at everything that comes on the market. And what we find, and as David mentioned earlier, anything up to sort of the $6 million mark is really quite a competitive. Lots of people that can afford that we're competing with, and over that price, there aren't lots and lots of operators in the market, which is where we're identifying the opportunity. And we've already, I think, in early times, developed a reputation of being professional. We make decisions fast, and we deliver. And so I think not only it's an upside for the sellers, but it's also the brokers are bringing us those opportunities.
Mm-hmm. And is there any place you won't go, or is there anything that you would steer clear of as far as geographies or locations? Yeah,
the power of the no is almost as powerful as finding good opportunities. So we're not looking at turnarounds. We're not looking at greenfield new builds and development. We're not looking at pubs and gaming. We're not looking at, and we may get exposure down the track, but we're not looking at places like Cairns and Gold Coast and Jindabyne, where it is a very fluctuating seasonal tourism market. We're sticking to the boring, sticking to the regional areas where it's underpinned by, the seasonality is much less. So there is sort of power in saying no to opportunities and making sure we can stick to the ones that are quality, highly profitable, and have a real diverse sort of guest profile.
So what's the competitive moat here? You mentioned you're a startup, so I feel justified in using that word. But I mean, this all makes sense. I mean, I'm not vouching for it, but it makes sense, right? So what's to stop somebody else from coming in and nipping at your heels and trying to pick up some of these properties as well?
Yeah, I mean, like the pub industry and childcare, I think, people will take notice of what we're doing and start coming. I think we've got a first mover advantage. I think our proprietary property management system, but also revenue management system is very important, and having a head start on that. And I think really it is the track record of being a good owner and a good corporate citizen and working with those brokers and forming those relationships. So I think we've got a good head start in the industry.
So when it comes to scale, will that also help with margin improvement, or how does that help?
Absolutely. We're already seeing in our procurement efficiencies of scale.
Yeah, so obviously, as we acquire more properties, we're rolling out centralising the accounts or supplier arrangements that we have. And as we scale, we'll be able to be, I think, more sharper around the prices that we provide by our suppliers, which, we're very focused on making sure we support Australian-made and owned and operated. But as I said, there are some aspects in the region. So, for example, in Tamworth, the laundry supplier who supplies the linen might not do Seymour. So and we also, focus on supporting the local economy. But where it makes sense and where it's achievable, we will definitely roll out synergies across the group.
And I think conversely, obviously, the loyalty programs and then having a chain will be the single largest owned and operated motel chain in Australia. So there's not a lot of competition. There's 90% are independently owned in Australia. So once you have a chain with a recognisable brand throughout Australia, you really get that loyalty from travellers as well, looking for your brand and that brand promise.
Well, can we flesh that out a little bit? Because that's a part of the story I find interesting as well. So it's not that you're going to maintain these motels with the sign out front as it necessarily sits right now. You're looking to actually create a new Australian brand that Aussies and investors will be able to recognize?
Yeah, that's right. I mean, there's some marketing affiliations in franchises in Australia that are marketing affiliations like Best Western and Quality and Comfort Inn and things like that. They're brands that are quite old now, quite established. However, they've never really got full coverage. And I think, in my opinion, it might be controversial, but they're a bit dated. They are older brands. We're looking to have the first fresh Australian motel brand in Australia, bringing hotel quality to the regions. And so when people go to a town for a family event or an anniversary, they can look at that brand and they can know that that's going to be quality. That's one of the modern brands, and we're implementing modern techniques and giving a brand promise of comfort and quality.
And you're not going to give us a preview of that brand right here, right now, are you?
It's very tempting. It's very tempting, but it gives me a reason to come back.
Okay. That'll be really exciting. I do remember, long road trips with my parents going through, Canada, but mostly when we were going down to Florida and the States, and you would only book at, say, the Days Inn, because at least you could be guaranteed that it was going to be clean. So it's that sort of an identification. Okay, so when you are thinking about this brand and building this portfolio, what does it look like in 5 years? Are you done? You're exiting? The valuation will be there? I suppose I would like to know what sort of, other sort of paths could this journey take you on?
Yeah, absolutely. I think first and foremost, we're doing this as much fully for the investors. We wanted to create a product where, Australian investors come in on a commercial property product and get high yields and some capital upside backed by a diverse base of commercial properties. So we want to fulfill that promise, which is a 5-year fund. We want to exit and provide a liquidity event for our investors, and that is provide monthly income. Our target is over 10%. We've been hitting that month on month for the last 3 or 4 months. It's been 10.5, 10.6, 10.5. So a part of the strategy is making sure that income stays at that level, but providing the exit, and that is a liquidity event. So that could take a couple of different forms. But to continue on the vision and continue building after 5 years, you can list the property side of the business as a REIT on the stock exchange, and also the operating business, which will be a consumer brand with an EBITDA of 20 to 30 million. So that's quite a sizable company we could also list. And that's a way to keep the journey going and the expansion going and the business building, because certainly creating an institutional grade portfolio requires that to be a sizable business, is sustainable on its own 2 feet. So There is two priorities. One is to get a return or a liquidity event for the investors to make sure that 20% capital growth can be liquidated, but then looking for ways to continue the business on, because that's what's going to create the value in the exit, is making sure it's a sustainable business.
Mm-hmm. What excites you most about what you do day to day right now at this very early stage?
Up until the last year, I've lived my whole life in regional Australia. So South Australia, the Northern Territory and Queensland. So I love being in the regional parts of the country. My role already has taken me to places that I've heard about in particularly regional New South Wales that I hadn't actually been. I get to deal with really great, hardworking people on a daily basis. But for me, the biggest thing I get excited about is the results and seeing already what we've achieved. And as David mentioned earlier, some of the low-hanging fruit. But what we can achieve, I think, as these properties come on board, what I get excited about is delivering that upside. I haven't seen any reason why that won't continue.
Yeah, we've got a graphic up on screen, which I think it's worthwhile touching upon again, because you mentioned that 2.5% to 3% revenue growth that you've got in your forecast, and it's that replacement cost. We've talked about it on the program before. Nobody wants to build new motels because it's so difficult and so expensive. And then talk to us a little bit the supply demand dynamics that you factored in.
Yeah, absolutely. So supply is severely limited because of construction costs. And we've just talked to a couple of builders who want to build something and sell it to us because we won't take on that development risk ourselves. And it's just too hard to buy existing assets that are below replacement costs. That's where the market is at the moment. That sort of underpins the value in these assets as well. But on the demand side, there is a movement, in Australia of people to the regions in terms of work and work from home after COVID. There is a lot of investment in our regions coming from renewable energy, mining, agriculture. Agriculture's had a lot of good years in certain areas across Australia, infrastructure projects, defence. And so, the regional areas actually provide $650 billion worth of GDP to the country every year. So there's an enormous amount going on in the regions. And as I was sort of alluding to, there's a whole lot of different pockets of different industries. And so the demand is there and the supply is constrained. I mean, it's accommodation in Australia. It's a constrained supply.
And demographics as well, with more migrants.
More population, yeah, absolutely.
It's really interesting because I have noted that there's been a few write-ups in mainstream financial media, I guess you could say, about motels and how the asset class is starting to emerge. Does that also give you a bit of a tailwind in terms of? Yeah,
I think it does. I think it does. I think we're getting the word out in the streets about motels. It's sort of been, as I said, hidden behind that cottage industry for many years, and that perception. And so we're sort of tapping into the larger motels where the opportunity is. And certainly the AFR have had a couple of articles recently, and resort brokers have published the first motel report because, even information about this sector previously has been hard to find. And so, yeah, there's a lot happening. And I think it's sort of time for the industry now to come to the fore.
We've had a question come in just from Anne, who says, thanks, Anne, by the way, do the previous owners of the motels you buy remain financially invested in the business? What incentive do you offer them to sell, especially if it's their business that's kept them busy and employed? Absolutely.
We're finding with the motels that we've got in the pipeline, the ones we've bought, succession is a big thing. There's some of these have been in the family. They might have started in a small motel and expanded that, or they've started with one and bought a second one with that cash flow. So often it has been a family business for quite some time and grown it over 10, 20, 30 years. But as often is the case, the kids growing up don't always want to take over the family business. And so there's a lot of succession in terms of the decision-making of the sellers, and obviously being able to sell that big asset, a $7, $8, $9, $10 million asset, and provide your kids with a house deposit. It's very attractive, obviously, and have a retirement. So, we're finding succession is the biggest reason for selling. And yes, we have got some of our sellers coming to us looking for a place to invest, because that's one of the fundamentals of investment writing, is investing in something
Yeah.
Is the first rule about investing. And so that makes a lot of sense. And we can actually get a higher return for a lot of motel investors because we're getting the economies of scale, which you can't do when you're independent. We're taking care of all the headaches for them. They don't have to manage it. And then that's that upside at the end when we get that institutional grade platform. You can't do that by yourself. So when you get 50 together, you get that uptick at the end. And so we're finding motel investors coming into the fund.
And the other thing is that quite often it's their home. They spend 24/7 at the property and have seen, as David said, have seen it grow from, which may start out as a 10 or 15 room to a 20 to 25 room property. And they're immensely, and rightly so, immensely proud of the motel that they have and the business that they've created. When they're coming to us, they want that legacy to continue, and they want to know that it's going to go into hands that it's going to see that reinvestment continue into the future, and continue to build on what they've started. And I think so far we've done a great job in delivering that. Yeah,
we really want to ooze the character of our regions through this brand. So it won't be a brand, with one size fits all. For Rockhampton it'll be beef, for Dalby it'll be cotton, for Ross it'll be wine. So we want to make sure that story is through the brand, comes through the brand as well.
And I'm doing you a favor. She's asked another question, but it is, I think, worthwhile because we've talked about the diversification, which could help, I guess, offer protection if there was one area, sadly, that has bushfires, or one area where agriculture didn't do well that year, or something, industry shuts down. But Anne has brought up, what we're all scarred by, the pandemic. She's saying, is there a plan for another pandemic that prevents people from being allowed to go into the region?
Yeah, I studied this with obvious reason because it is something that they're... Through the last pandemic, I talked to a couple of different bank managers, and they stated quite clearly that they gave repayment and interest repayment holidays, and so they didn't foreclose on any of the loans that they had in the accommodation sector. They gave a holiday for 6 to 18 months, and then they extended the term at the end of that. So the debt side of things in our fund as well is quite conservative at 50%. We're aiming for a long-term target of 45% leverage. So we've actually got a 3 to 4 times interest coverage in our cash flow. That's how profitable these are. So we have a lot of margin in debt servicing, and then if the worst came to worst, we can freeze that debt servicing requirement. The other part of it as well is that what we found in the COVID era was that having a diversified portfolio really helps, because Queensland might not be locked down, whereas New South Wales was, or Victoria was, and it certainly impacted the cities more than it impacted the regions. So actually, you'd be quite surprised that a lot of the motels across Australia were either open, or when their sisters or brothers in other states weren't open, the corresponding portfolio was open in other states. So we expect, looking at that history, to maintain occupancy and maintain revenue, albeit at a lower level, but not so low that it puts the business into jeopardy. And we actually saw after COVID the average daily rate across the industry, and we've all noticed that the costs of the rooms have come up. So it was actually, the industry came out of that very, very strongly, because a lot of people flocked to the regions and really raised the profile. So yes, it was some short-term pain, not terminal pain, but certainly short-term pain that you can manage through. And the last point there is that there's a lot of variable costs in the business. So you could quite easily mothball one of these assets with very low variable costs. The power and the water and the cleaners and the linen, the cleaning, it's all variable costs. So you have lower occupancy, you have lower costs.
Mm-hmm. We have had a note from Kieran Wee saying, assume there's a PDS which will explain the structure and terms. Yes, you would have been able to see some of the graphics that we've been putting on screen when you registered, but how should people learn more about this fund?
Absolutely. So this is a managed investment scheme open to sophisticated and wholesale investors. So you can download the investor presentation and the IM. So there's an IM, we have an ASIC license, we have an independent trustee, so a very strong layer of governance. So deltine.com.au is where you can get the investment material.
Deltine, like pristine, Deltine Capital, Ausbiz.com.au. Look, it's early days, relatively speaking. I know you've got wins on the board already with these motels and a couple more in the works. But if I'm an investor at home, I'm wondering, why now? Why invest now as opposed to waiting?
Yeah, well, I guess the Warren Buffett quote is, invest when others are fearful and go against the grain. I think now is the time to act. Buy low, sell high, and this is when the opportunity is sort of a bit untouched. We're getting yields, as I said, between an average of 11%, between 10 and 14%. So the longer you wait, the more yield compression will occur, and you'll miss out on that capital growth.
So, Michael, you've got some work ahead of you getting into the regions and sourcing these properties alongside David.
Yes, I was last week. I did a day trip out to regional New South Wales, had a look at a great property that hopefully is something that we may be able to add. But we spend a lot of time on the road, and as executives in the early days, we spend very hands on. And for me, I actually find it very helpful being a major part of the acquisitions, because on site I can see the upside, I can see what needs to happen, and we can basically, before we even settle on the property, a lot of those areas where we can make that initial upside have either already been implemented or about to be implemented, and we can deliver those results.
So you can't tell us where you're headed next?
No.
Well, David Toomey, Michael Jones, thank you so much for joining us, getting us across this Deltine High Yield Motel Fund. Appreciate your time. Thank you.
Thanks very much.
Thank you all for your questions. I believe we answered them all. Really appreciate you watching. Again, you can get in touch with the Deltine Capital team at deltine.com.au. Thanks for watching. We'll see you next time.
Let's go.